Ring TV coverage of the 2016 NAMIC convention is brought to you by AAIS. Shaun, a recent Swiss Re report says Mutual Insurers' share of the overall insurance market increased from 24% of direct premiums written in 2007 to over 26% in 2014. Why do you think this trend is happening now?
Well, I think this trend is happening for three main reasons. First is trust, and that word trust is really been given a greater reputation for the mutual sector since the global financial crisis. Secondly, we're also seeing better marketing by the mutual sector of its values and its differences and its ownership structure, so that customers can actually tell the difference. And thirdly, it's the greater awareness that there is an alternative that is mutual, that is there, that is customer-centric and focused purely on the customers and not on the shareholders. So I think all these three things have worked together nicely to increase the mutual market share from 24 to 26% according to Swiss Re.
The report also suggests mutual insurers may be challenged by new risk-based capital requirements and evolving governance standards. What do you think?
Well, that has two parts to the question, really. The first part is around the solvency and the second is around the governance. So I'll touch on both of those. Well, the solvency side, I think the report actually does say that it's the small and the medium-sized firms that are challenged by the risk-based capital model. The larger ones tend to be very much in tune with this. So it does focus on the fact that we need to have proportionality in how we actually implement the regulation. And that's across all nation states, because it'll be down to each nation to actually put its own proportionality tests in place. So those proportionality tests have to be appropriate to the types of business model that are there. Now, given that most of the small, medium-sized insurers are actually mutuals around the world, we are expecting to have some good practice guidelines from the global regulators that actually say we take account of this particular form of governance. So, for instance, ICMIF has actually produced a guideline for regulators and legislators explaining how the mutual insurance sector actually operates and why we are different. On the governance changes, well, again, I think there are three key things here. You've got to have the right board balance and independence. You've got to have the right checks and balances for membership, for management, and you've got to have the right representation of the affinity group or the mutual sector that you represent. And if all those three things are correct, then I think we're starting to see the right and appropriate governance models with the mutual sector. And many mutuals around the world are at different stages in developing, and this is an evolving cycle, I think. And some, without doubt, are best in breed and best in practice in their own country amongst all insurers, whereas some have still got the changes to put in place. So it is a changing environment. But one of the areas which we're actually seeing an increase, or we're ahead of the market in, is the gender balance we see on our boards. On average, our members have 21% of their board members are female, and on average, nearly 50% of the members actually have 3 or more board members that are female. So the industry average is about 17.5%. So again, we're well ahead of the industry average in this area. And again, similarly with the CEO side of things, we are now having 18% of the ICMIF members have female CEOs. And that is up from 2005, where it was only 7%. I think the industry average is somewhere as low down as 2% would be the best estimate. And I think if you're actually going to look at problems in governance, we shouldn't really be earmarking the mutual sector. We should be earmarking the shareholder-based sector, because many of the problems that came out of the global financial crisis were as a result of poor governance of shareholder-based companies. We had groupthink, they had too many people who looked the same, think the same, and didn't have our diversity that you tend to get in the mutual sector. So if we're looking for best practices, we should be looking towards the mutual sector, and not, as policy makers are trying to do, is focus in on the shareholder-based one as having the best governance models. That is clearly not where the best examples are.
Shaun Tarbuck there, Chief Executive of ICMIF, speaking earlier to me from the UK, and will be on site in Vancouver next week for the annual NAMIC convention. So keep it here for full conference coverage starting next week on Rin TV.